The Eurozone drama has a new and unexpected actor, Slovakia. It is the final country which must ratify the EFSF, but the initial vote was unsuccessful. I'm joined by Societe Generale's Sebastien Galy to talk about the latest developments in Europe and Asia. Sebastien, are you expecting Bratislava to eventually pass this proposal?
What happened essentially is you had basically 3 parties out of 4 voting for the opposition, essentially not voting. So it was linked to a vote of confidence, and therefore it ended up failing. Now, we had announcements earlier in the day that the oppositions would not support this initial vote, but would support a subsequent vote. That means the passage is more or less guaranteed. It's just really a question of who gets what in terms of a sharing of power within that country. So the market is expecting this to go through. I think the question is really regarding the timing of such a vote. Now, they promise by the end of the week. Of course, we have no idea if that can happen, and that becomes a trade not necessarily for spot traders, well, in as much as it is an increased uncertainty, but it is a trade for vol traders. So net, I think us and most of the market, as you can see by Eurodollar breaking above 137, expect that this is no longer a concern.
Let's assume it is passed successfully. Will we see a big jump in the euro when eventually it all goes through?
Yes and no, because I think at this point in time the market is 100% priced for essentially for that vote. So it is already anticipating that vote, and when we do get that vote, we actually probably will get some profit taking because the market is relatively bullish. It's being supported by bids probably from, or actually very likely from the sovereign wealth fund side. So there's a real fundamental demand from people who think the Eurodollar is undervalued relative to some long-term fundamentals, which is particularly the case for anybody having large exposures in the dollar. So when we do get that vote, I mean, the odds are actually we will get a bit of profit taking. So I don't think the vote per se will actually end up being a positive for Eurodollar.
I was reading Societe Generale's investors note this morning. It seems you're warning that there is a danger of too much attention being paid to Europe at the expense of what is unfolding in Asia.
Yeah, I think if you remember in January 2010, we were trading Europe by talking about Greece. Now, Greece is always important, but Greece is a very, very small fraction of the Eurozone. It is important because of what it represents in terms of a credit crisis and excesses within the Eurozone. The same way as we were talking about subprime to explain what was happening in the U.S., subprime was just one part of the credit issue. There were far wider issues behind it. As we've been trading for the past, past year or more, we've been trading the global imbalance by talking about the Eurozone. And the real story is, of course, not necessarily the Eurozone, because Eurozone will survive one way or another. It's being, patched up, and that more or less will work out. The real story is actually Asia versus G10 or Asia versus US, if you want to simplify it. So it gets down to the level of, votes at the level of Congress for or against bills to punish, quote unquote, China for having an undervalued currency. So you get into that kind of tit for tat type of attitude. It is a story that the global cake is essentially slightly one-sided, depending on whose side of the border you're standing on, and because the cake is increasingly small, at least it's not growing as fast, to be very precise, there are more and more tensions. So now it's quite similar to what we had in the 80s between the US and Japan, and now we're switching essentially from that story of global imbalance, which was a European story, to a story of global imbalance, a real one, which is essentially more or less, to simplify it, the US versus China, and that is getting to be quite interesting. So we can see some leading indicators within Asia are continuing to show some form of mild slowdown. You also have stories of some excesses within credit, also in China, and now starting to be revealed. It's been going on for a few months, but very few people have paid attention to it, except for people who invested there. And at the same time, you're getting more and more attention within the U.S., whereby there, of course, because of QE and different reasons, you're starting to see increased political tensions between those who suffer the most during this adjustment of global imbalances and those who suffer least. And that is creating some political tension, which, of course, favors, I wouldn't call it trade wars, but favors some more robust response coming from Congress. And that, of course, is a great worry for both China, the US, and everybody involved.
Okay, thank you, Sebastien. I'll be speaking to the chief Asian economist at Credit Suisse on Thursday about China. It's definitely one to watch, as previously he had some top-notch insights into the world's second largest economy. Goodbye for now.